Yep, sorry. So this is telling me that we are at a good point of interest, and these four confluences, one of them is the buyers are trapped at my confluence, at my point of interest, sorry. Buyers are trapped. We have a single print, buyers are exhausted. We have a blue ratio, sellers are defending, and we have sellers joining here with these lots. Most importantly, we have almost 150 buy contracts trapped at the high at my point of interest. And also, if you see, the sellers volume is very, very big than buyers. So these four confluences is telling us that is going to be, dropping south, and that it happened actually. So that is from the order flow, how we look for the confirmations, So, and you'll see, yeah, we saw that after the price is dropping here, and this is the one area we should take profit, which is nothing but VWAP line. So this VWAP line we always use to take some profit. When once it touches the VWAP line, you book some profit here at least. So this order flow software is cannot be manipulated. These data, what you're seeing here, these contracts is buy side, sell side. These contracts cannot be manipulated because these are coming from Chicago or CQG exchange. So it's futures data. It's not forex data, or it's not dependent on any broker. It's futures data. So these data is not manipulated. So once you have the software, then you can get also these data and you can use it at your point of interest. Just don't use it isolatedly. At your point of interest, if you see these confirmations, then they'll definitely take those. For example, say USD CAD, when I saw this one, so I bought it here actually. When you saw this confirmation that, okay, this is the VWAP line, it's rejecting with the VWAP line. So that already gave me the confirmation that it will go up. And with the huge volume, see, the volume are shifting, the huge buyers buying volume. There's almost no sell volume here. If you see this max delta and min delta, so no sellers were almost present here. I would say very less number of sellers here when the price was moving high, and it was rejecting this VWAP line, and now it was going up, and still it is, I think, going up a little bit. So I think and we have in USD CAD, I think we have still there a movement. Yeah, USD CAD we saw 1 hour. If you see 1 hour, then but we almost touched the inefficiency here. So I would say if it comes here tomorrow, London, then I would definitely think of it as a buy. Why? Because if I go to the price section, then I would see clearly I'm seeing the stop hunt. There's a stop hunt already did. There is stop hunt. They did a break of structure here. This structure already broken by this strong move. And now when they're coming here, it might go up. But one thing I'm worried about, because it already took this inefficiency. So a better price action would be if it did not take this void or imbalance, and maybe it was coming here, then I could take the trade with more confidence, thinking that this void will be filled up. But still we have a little void here. We have still this void left out to filled up. You can draw this way. Someone can also draw this way. So I'll take the minimum thing, because I don't want to take a chance. So still I would say the price might move here, because yeah, that's what I'm thinking for this USD CAD. If you see a similar kind of setups, actually, GBP, JPY, these are price action setups. So if you see the same thing here, you see a stop run, at least you see the break of structure, two break of structure. This is a nice demand. This is also a nice demand. It broke all these two structures. But always remember, when the price is breaking these structures, look for the inefficiencies. Look for the strong move without touching those candles. So I don't want a candle like this when the price is moving up or down. I don't want a candle like this. Say, for example, I don't want a candle like this. See, this is not a nice move because the candle moved. There's not much gap in between these two candles. See, here and here, not much gap. So I need inefficiency. See, clean move, clear. You'd see some inefficiencies. So that makes a very good zone. So if you mark this one, then what we have here again the stop hunt. We have the strong move down, price move down, coming here, little bit consolidation here again, and it hits the zone. So that was the zone again. And for target, I always think of imbalance. So that was the imbalance already there. So if you would have sold it from here, then your target should be, first target should be here because that is one valid demand. It might hold your price. This should be your first target. A second target should be your inefficiency, this one, middle of somewhere. So that's a good trade, very good trade. And these things happen every day, every day. I'll show you many. USDJPY on M15 yesterday. If you see this one, this is also nice. USDJPY also yesterday was there. I found a trade, or today also there yesterday. Yeah, these movements is very powerful when you see these gaps. Yeah, I will say this one. See, here we have a clean stop run yesterday. We had a clean stop run. It stopped out and then it broke the structure. And when it broke the structure, I want at least two levels of breaking structure. This is one, this is two. So I'd say these two levels, when I see these two levels broke, 1 and 2, both levels are break properly, then I have, okay, then I have this inefficiency. I will not take this one. So that's a very good point why you will not take this zone and why will take this one. Because you see, I will not place a limit order here. Why? Because you see this zone, see the movement, it is already mitigated. There is no space in between the candles. There is no space. But look here, this one, there's this doji and this movement, there is no gap in between. That is why the price actually hold here. You could have placed your entry here. Your entry should be here only. This and this. I will not take this one. I'll take this one because there is the inefficiency, the strong move. It's not from here, it's from here. And you can definitely target the nearest demand here. I mean, the closest demand. So the closest demand would be might be here. The 1:3, 1:4, you can definitely target like this. So this price action I see every day. I'd be telling you one more because you can spot these setups anywhere. GBP New Zealand, I would say. See, it happened just now. See this one. There's a stop run. The same thing. The stop run happened here. The stop run and then it broke. It broke two levels. As I told you, I always wait for two good levels to break, not the one, two. First, and there's a nice demand, two. I mean, you can take this in demand also. So three, almost. So three demands. This sharp move, you see, broke three levels of structure and a stop run. When it happened, then you check this strong move. See, there is no candle touching in between. There is gap, always gap. This move is started with a huge gap. So my order will be here. I will just put a pending and just wait. Wait. And if you see, so I'll be putting my pending here. All right. So there's nothing to do. And here, and you'll be taking your nearest demand. For example, here, nearest demand maximum here. This also one is to 2.5, 2.8. But here, a very good point, if you see, nice point we have. If you get this kind of setup, then these are more powerful. We saw a consolidation before hitting our price, before hitting our zone. We also see a consolidation. So this consolidation, accumulation, manipulation, and then distribution. This kind of setup is very good. And when this is happening, okay, we can look into the pair. This is GBP New Zealand. So we can always go and check the GBP. What is cooking in GBP futures in order flow? And if order flow is also telling you that there is a setup here, because this setup is already a very beautiful setup. It's already a gold setup. Why it's a very good setup? Because if I go one more time frame or two more time frames up, that is daily, then you'll see it's already at a higher time frame confluence. Check how nice the daily time frame is already there. So it gives you more confidence when you are at a higher time frame. Already you are at a higher time frame, that is daily. And now on H1, inside the H1, you're getting these stop runs, nice structure break with a strong move. That will already telling you that it's a very, very good setup with a strong imbalance. So there's no gap in between the candles. And when it is trying to reach our zone, we are also getting this consolidation. So this makes you a perfect textbook trade actually for you. SPX 500. I'm just trying to show you that this setup happens every day. SPX 500, we have a 2-hour nice supply. And check my all zones. When I mark the zones, you see, I mark only those zones where there is no candles touching. There's no wicks are not touching. It's clean gap you're seeing. Those zones where we see the clean match, clean gap, and at least your this zone and the movement should be 1:2 at least. Now you see when the price hitting this zone here at the left side. So at the left side now on M5, if I open this one at the M5, so what happened at the M5? Okay, let me first sync the chart so you'll understand. Let me sync in layout. So it just synced my M5. You know this feature in TradingView, right? If you're working on two charts, two windows, then say on high time frame you're marking any zone, then if you want this zone to be sync in your lower time frame chart, then you can just come here, right click, and just sync to chart, sync to all layout. So that will take your this markup in your lower time frame like this. So now if I come to lower time frame, so this is my M5, it touched the zone, yeah, maybe by 0.5 or 0.5 piece, but that's the broker issue maybe. But now you see here what's happening here, also the same thing. Here we are waiting for a strong move. This is a nice zone. Yeah, price could come also here, but also this is also a nice zone. See the imbalances and see this liquidity is building up before hitting the, and it hits, and see stop loss way, and you can easily take at least 1:3, 1:4. This is a big trade I took, but this is maybe 1:3 or 1:5. You could have easily taken this. So these are price action setups I wanted to discuss. Why I discuss this price action setups? Because you can combine your order flow with this kind of price action setup, definitely, as we saw in GBP USD, the first example. Okay, now we have 8-9 minutes, but it's actually regarding the order flow. So please, if you have any doubt in order flow, because I know there are new members here for order flow. So if you have any questions, you can please unmute yourself and please ask your questions on order flow. If you have any questions here on order flow, like how, I don't know what question you might have, but you can ask anything.
Can you hear me?
Yeah.
Yeah. It's not really about the order flow chart, but just on the trading view.
Okay,
Can
sure.
you just explain a little more why you place the box where you place it?
Yeah, sure. You know what I need to do, if you say you are working on two charts, then you can do a sync layout. Say, for example, I draw a box here. I draw a box here, and I want this box to be also shown in my lower time frame charts or my other charts, and just right click it and sync in layout. So this will be appearing here. You'll see the box you're going to see here. There's a box, same box. Did I answer your question?
No, not quite, Debrash.
Okay, tell me.
I understand how you put the box there. Just usually when I place a box, it's more on the body of the candle and doesn't include the
Okay,
wick.
okay. You're saying this one.
Yeah, so up to now, if you drag that whole box down so that it doesn't include the wick,
Okay.
so it's just on the body of the candle. That's how I've been placing boxes up to now. So see, I take a little bit of drawdown before it goes in the right direction, which isn't an issue for me. It's worked up to now. You obviously seem to snipe slightly better entries than me. I just wonder if you could go into a little bit more why you place the box there.
Yeah, it's like, if you're in a supply demand, core supply demand, then this is my proximal line and this is my distal line. Okay, so these order blocks and those things are coming, they have come later, because before we have these supply demand concepts, which are, this is called proximal line, which is nearest to the price, and this is called distal line, which is farthest to the price. So there's a rule that when you are drawing a proximal line, then your mother candle is this one, which is bigger than the one you are thinking, maybe this one. So if you like draw this one this way, then your drawing actually is wrong, the way you draw supply demand, because it's drop, base, and drop. If you want to mark this one, you have to include the mother candle, which is this one, and see that that's how it plays actually.
Could you go over another example on GU, please?
Sure. For the GU, what we did here, the GU example is this one, right? GU. So GU, I looked at 45 minutes first. 45 minutes, if you see, we had a nice zone here, 45 minutes. Okay, there's a nice drop zone here. And when on M5, if I now open only M5, so what happened M5 here, M5. On M5, when we open the order flow, in order flow, what we are seeing here, in order flow, this is a zone actually, the same M5 zone. This is the area where it hits, say for example, that was the area, okay? And it came to reach that price, hits the zone here. When it came here, I would try to look for my order flow 4 or 5 confluences. But if it's a very good price action, then 3 confluences is also enough for me. And now what we see here, because I want to sell, but before selling, I want some buyers to be trapped. I want some buyers to try for the last time, and so that these buyers are getting absorbed by some real sell passive limit orders, so that these buyers must be getting absorbed. In order flow, we all, if you don't know, then let me explain one more time. If this is an order flow candle, if you're seeing like this, if this is an order flow candle, so we know that this side is offer, this side is offer or ask side, and this side is bids, okay, left side. So when buy happens, then buyers always buy diagonally. They hits offers or they hits asks like this. And when sell happens at marketplace, at market price, then sellers are hitting the bids diagonally like this. So here, if you see this example, buyers are hitting diagonally, they're buying. They are stronger. 23 is stronger than 1 if I compare diagonally. So that means 23 buyers tried to push the market hard to the upside. 119 lots, they tried to push the market up. But finally, when the candle closed, they could not move the price up because the candle closed bearish. This is one confluence that, okay, 150 contracts, if I add up these numbers, then I see 100, almost 150 buy contracts try to push the market up, but they could not. This is one confluence here. One first confluence. Second confluence, we have single print. Single prints are actually very, very powerful if it's used in right area. This is the right area for us because we know this is a very good zone to sell. And single prints are saying that buyers are exhausted here. This is also last buyer. He's now exhausted. And when the candle is closing bearish, then you see these sellers are joining. When you see these sellers on the body, that means they're now aggressive sellers are joining. They are trapped, and now the aggressive sellers are joining. And if you see the volume here, the volume, sell volume is huge compared to, if you compare these, see, if you compare your all previous 5-6 candles, see, they're all small buyers, see these 400, some huge 496. So that also tells you that sellers are very strong here. Yeah, so these, and there is also one conference is blue ratio. I actually use this. Blue ratios, nothing but maybe you can go through the course and check. The blue ratios are going to tell you that this is sellers are defending their positions. So we have all these confluences from order flow at my good point of interest, which is this one. So with that, taking into consideration, you can easily sell from this place. Your stop loss should be just here. Yes, you might have sold it here. Stop loss should be here, and you can target your at least this trend line liquidity to be taken out, or nearest demand which is not being mitigated. So always look for the zone which is not being mitigated here. So your safest would be at least this one. At least 2 you'll be getting, 1:2 and those things. Is it clear?
Yeah, I understand the order flow. It was just where you're marking your point of interest that I was curious on.
Okay. Yeah.
So it's more you're identifying a point of interest as opposed to trading from a 50% of an imbalance.
Yeah.
Am I right?
Yeah, that's also that's also you can do. But with order flow, definitely we can actually, this is true that with order flow we can wait for the price action to give some confirmation and then we enter. That is true. But yeah, it depends upon the trader, what kind of trader you are. If you are a set and forget trader, you can just put pending limit and you can close your trading station and you can just wait for the result. But some people also may use order flow when the price is there, then they can check for some things. So that is how actually I was also looking these days that but
I would say it makes you a lot more confident when it comes to your point of interest. You're keen to maybe
because